Fortune favors the bold, which is why billionaire Eric Sprott and legendary investor Rick Rule are taking advantage of the lowest valuations in the mining sector in over 3 decades by accumulating millions of shares of this tiny new stock led by Keith Neumeyer, a mining entrepreneur who has already built 2 separate billion-dollar companies. This new venture, starting with 18 assets on day 1, including gold, silver, copper, and zinc projects, has already identified 60 additional quality assets in distressed companies that management will work to acquire. To learn more about this incredible opportunity, visit futuremoneytrends.com/fortune. Greetings and thank you for joining us at futuremoneytrends.com. My guest today, this is a very, very important interview. When you think about legends in the investment world, you think about guys, especially in the resource, gold and silver world, you think about guys like Eric Sprott, Rick Rule, Keith Neumeyer, Doug Casey. But what about the people who are on their way to becoming legends? My next guest has raised $1 billion for this industry. He's known as the most disciplined stock picker, one of the most successful investors in this space. He's a New York Times bestseller. He's a keynote speaker all around the world. He's been on the show, regular guest, for 3 years now. And for 3 years, he's so disciplined, he has only recommended 2 stocks to us. One of them is up 200%. The other one is up 50% in a severe, one of the worst bear markets for the resource stocks. Think about that. Today, he's agreed to give us a new one. In fact, it's trading at a price today less than where himself, Eric Sprott, Rick Rule, Doug Casey recently financed the company for. We can buy it cheaper than these guys did. This guy is the one guy I think people should look forward to listening to in this space because he's not only been disciplined with his picks, brutal honesty, predicting deflation in these stocks in 2011. He's now started his own firm, Katusa Research. It's katusaresearch.com, where you get everything for free. Billionaires, millionaires, major hedge fund managers, Goldman Sachs are reaching out to this guy to get his research. And because he makes all his money from his deals, his own deals that he's involved in, he's offered to give all of his research for free. So if you're a regular investor, you don't have access to these $1 million reports or this expert going around all over the world to visit sites, he's giving it away all for free. Marin Katusa of Katusa Research. Marin, thank you so much for joining us.
It's my pleasure, Dan.
Marin, I want to start off with just a question out of curiosity on commodities. Are you? I know you focus on the people and the business structure. Are you also commodity driven? Do you have any commodity companies you don't want to touch, or specifically, are you after a specific commodity? I mean, so like, do you avoid, let's say, zinc and lead, and then you're driven to focus on uranium and oil? Do you care what the commodity is?
You know, it was funny. I was on TV a couple of weeks ago, and the commentator asked me, Marin, you've done well. What's your favorite commodity? I said, cash. So let me start with that now. In 2011, I went on national television. In Canada, the biggest TV show for resources focused is something called BNN, the Business News Network. And in 2011, I basically stated, get out of coal, stay out of coal. Shale gas is going to kill the thermal coal industry. I think there's a global turn down here, and I think that steel is going to go down, therefore met coal is going to go down. At the time, Canada's largest diversified miner was trading over $50. I think it was like $55 at the time. And I said on TV that this will go below $25. Today, let's fast forward 4 years, it's $14. So when you ask me what commodities I'm staying out of, I have zero investments in coal, and I said this publicly since 2011, and that's been a good call. I have zero investments in iron ore. That's been a good call. Mm-hmm. I focus, Dan, on where I have an advantage over the markets. For example, like on your show, I remember it was about this time last year, actually, when I came on, and UEC was about $1, and I said, just buy this. And today it's over $2.75. I've been to all of the U.S. ISR projects, producing projects, and I have an advantage because I know all the players, I know all the analysts, I know all the investment bankers, I know all the engineers. I just came back from Europe where I gave the keynote for the World Nuclear Fuels Market. So I like to focus on things where I have an advantage over everyone else because this is a very difficult business. The odds are stacked up against you, so I try to take every increase in leverage that I can. Other things that I'm very bullish on are management team who have done it before, who are putting their dollars in at the same price as us and want to consolidate and grow assets, because we are in this interesting aspect right now where you can consolidate companies cheaper than you can prove up resources. So, this is part of the bear market cycle. I still think we're going to be in it for a couple of years. I've been one of the very few guys who've been vocal about it, but that doesn't matter. You can still make a lot of money in a bear market if you just pick right and sit tight. So that's kind of where I'm focused at.
I know you were there at the nuclear summit in Paris to be the keynote speaker and provide insights. Being around all those experts and financiers and people in the industry, did you walk away with any insights? Anything that's worth mentioning to our audience?
Yeah, I didn't realize how many of the Russians were fans of my book, and they were really giving me a lot of insights on Kazakhstan. I've been one of the few guys vocally in the West saying, hey guys, be careful. For example, in 2014, the U.S. have increased their imports of Kazakh uranium by over 80%. Now, I don't know if people know, in 2014, the Americans imported 94% of the uranium that they purchased. This is insane. This is ludicrous. This is a strategic risk. This is national security issues. And of that, they've increased Kazakh uranium by over 80%. Now, the Kazakhs, just like Pemex or PDVSA, any of these national companies, they don't reinvest their profits into their fields. They get major declines. And the big question is what's going to happen to the Kazakh declines, because they've gone from zero to hero to the world's largest producer of uranium in less than 15 years. 20 years ago, they weren't even a talking point on the producers in the world. Now they're the major producer. They produce 40% of the global primary production. I personally think that's at risk, and that is the biggest black swan. Put it this way. Kazakhstan is 4 times more important to the global uranium markets than Saudi Arabia is to oil. Wow. That's scary.
That's a huge risk. And isn't China in the same position? They're importing most of their uranium as well, right?
True, but the Chinese are a bit different. They're establishing long-term agreements with the Russians, the Uzbeks. So if when you look at the strategy, I have a chart on my website where I show U.S. friendly versus, the Russian or Chinese friendly, and 80% of the global production is East friendly. That's Russian and China. And with the new Silk Road, you'll see the Eurasian Union come in tighter. So the Chinese, I wouldn't really worry about right now, because they don't have as many enemies as the Americans do. So the U.S. are the world's largest consumer of uranium, and they import 94%.
That's amazing.
So that's a big risk.
Marin, a big opportunity seems to have presented itself recently, and like I said in the introduction, you've given us 2 stocks, very disciplined stock picker, and most importantly, you're in all your own deals. So it's not like you're suggesting these things, but you're not in them. You've got a lot of skin in the game. Keith Neumeyer has recently started a new mineral bank with big names like yourself, Eric Sprott, Rick Rule, all involved very early on. Can you let us know what your own personal expectations are for First Mining Finance? Do you think this is going to be Keith's third billion-dollar company?
If you give enough time, I truly believe he will do it. I go back to, I think it was 2005 or 2006. I was the first analyst to write up First Majestic Silver, and I spent a week out with Keith that got to really know his brother, who was a great guy, Tony. I got to know some of Keith's old friends, guys like Silvu, who were just great guys. And I think the stock was like about $1 at the time. And about 5 years later, I remember it was kind of interesting. I sat back at a Casey conference, and Keith Neumeyer was inducted to what we had a Casey 10-bagger list, and his stock was at $30 a share. So in 5 years, it went from $1 to $30 in the open, stock market. Mm-hmm. And I look at what he's doing today. Ironically, an average person listening to your show can go into the market right now and buy First Finance cheaper than what Rick and I purchased it for in the financing. And that's the type of markets we get into. I believe that if you give Keith enough time, he's going to consolidate it. Look, I tried to become a 19.9% shareholder in this. Keith and I went back on, I think, 4 months of negotiations. I'm still a very large shareholder, but he wouldn't give me the allocation I wanted. And I think this is a great company with a great business model. And when Keith is buying in the open market, I think that's a strong assurance for the retail audience and the institutional audience. You know, he's not, I like to compare him to like the franchise players. Remember, I always talk about franchise players. You guys, like Amir Adani's a franchise guy. He only does 2 deals. You look at Keith Neumeyer, he's a franchise player. He's not involved in 20 deals and he's not overexposed. He's a focus factor and he puts his money where his mouth is. And in this game, Dan, when you've been around it for long enough, that's the type of players. You know, you can't win a championship without a franchise player, and you can't make a big score in the resource sector without a franchise player. And Keith Neumeyer is definitely someone you want to have your portfolio exposed to.
Yeah, you know, Marin, in a recent interview, I was reading that you had stated that $1 million was like having, I think, $2 million today, or maybe it was $100,000 was like having $2 million from 5 years ago. Can you explain what you meant by that? Is it just because the stocks went down, or is it because the assets themselves are truly undervalued?
Both. For example, I know many stocks, for example, take companies that were $4 or $5 that are trading 25 cents today, and yet they're double the company that they are today. And that's what I explain when the companies are down 80, 90, 95%, but the fundamentals of the asset haven't changed, just the market sentiment has changed. This is where the average investor, I know it sounds crazy, but you can literally put 10 grand in the market in 5 and 10 years. That's going to turn into $50 to $100 to $200,000. Look, I've been there before. I've seen it. And I just want to warn everyone, I think it's critical for people to only follow people who have skin in the game. I think it's absurd to follow talking heads who don't have their own skin in the game, because trust me, I felt the pain last year as one of the largest shareholders of UEC when the stock was being hounded by the shorters. But you feel it, you go through it, you know it, you talk to management, and today, we're sitting on over 200% gains on the stock. So this is what I'm trying to get at with people, to understand that the resource gains are very cyclical, they're very volatile, but if you stick with the right players, the franchise guys, you're going to get through the thick and thin, and stick with the right guys. You don't need to own 20 stocks. Dan, the biggest thing I've seen, all these retail people, they subscribe to 20 newsletters and they have 100 stocks in their portfolio, and I just sit there and go, wow. I'm one of the most connected guys in the business. My office is in the hub of Vancouver. I know every investment banker, and I have exposure to 9 stocks. That's it. I own 9 stocks in my funds, and I have tens of millions of dollars into the markets. Mm-hmm. So I think owning more than 10 stocks is very risky, because I don't know 10 phone numbers off of memory. And I think to own 100 stocks, how can you spend the time to stay on top of that? It's just difficult. So that's what I mean. Plus, the fundamentals haven't changed. Has anything changed here? You look at the gold, you look at the silver, you look at the copper, uranium. The fundamentals, the big picture hasn't changed.
What about the Dow Jones being, at this high, and the U.S. hasn't gone without? It's been out of recession for almost 7 years now, at least officially. That's obviously debatable, especially in our space. But is there any concern that here the resource sector is, kind of blown out? Looks like it certainly deserves a bottom, but it doesn't matter, because if we go into another downturn and slowdown, the resource stocks, couldn't they theoretically, go into recession with the Dow Jones, with the U.S. economy for 3 to 5 more years, right?
In the near term, definitely, man. Remember, I was one of the early guys. I went on videotape at a Casey conference in 2011, and I remember I was ranked the worst speaker at the show, yet I was bang on when I said that, if you think that stocks that Rick Rule or Ross Beatty are promoting can't go down 50%, we are in a deflation for resources. meaning the equities are going to get slashed. And in the near term, let's think back to what happened in 2008 when the financial crisis happened. Even gold sold off in the near term, okay, because everyone went to cash. There was a flight to safety. Even though gold is true money and it's older than the U.S. dollar or any printed currency, the reality is that in the near term, you'll have a sell-off on everything because what happens? You know, I've written for years about the trigger effect. You know, funds get redemptions because retail people panic or institutions panic. They pull their money out of a fund. A fund has no choice but to hit the bid, and it starts a domino effect. So in the near term, you've hit it right on the head. But this is why I've said for people, you know, my funds, one of my funds is 72% cash, my other one's 58% cash, and my other one's 52% cash. And personally, I'm like, I don't know, 65, 75% cash. So this is why I said we are nowhere near the woods. Start nibbling your favorite positions. You find a guy like Keith Neumeyer or Amir Adani from UEC, and you just sit there and you don't buy your whole allocation in one day. That's the biggest mistake I see retail people buy. You know, if you look at how I've bought in BRI, I've been involved in it for 5 years. I've built my position over 5 years, Dan. Mm-hmm. First Finance, same thing. I was involved in the first two financing. My last one, I paid 40 cents, and I'm going to continue to buy because they don't make enough Keith Neumeyers. There'll never be a shortage of junior resource deals. Okay, they're a dime a dozen. But a guy like Keith, they don't make enough of these guys. And when you come across them, go, okay, I'm going to put X amount of dollars in my portfolio, and I'm going to buy slowly over the next 3, 4, 5 years. That's how I build my positions when I find a franchise player.
Marin, last question. So there's a lot of unique and unprecedented things happening with a lot of the markets. You know, whether it's the Dow or gold and silver, currency markets, a lot of it stems from what the Federal Reserve, the U.S. Federal Reserve, and other central banks are doing. Looking back at other major bear markets in the resource sector, and I know you've been through one severe one in 2008, and your mentors, people who you speak with every day, Rick Rule and Doug Casey, have been through them since probably about the time you and I were born. But you know, my question is from the people you've spoken with, the research you've done. I mean, you've raised over $1 billion. Is there anything unusual about this bear market that kind of raises an alarm? I mean, obviously you're majority cash, so obviously there's something out there. Because if you look at a chart, this bear market looks like it's pretty lengthy here. However, you're still majority cash. So is there something unusual about this bear market?
Yes. The one interesting thing is the amount of cash that is on the sidelines, Dan. Since I started up my own firm, what I was most shocked about is how many institutions have been, like major fund managers who've been following me over the last decade, contacted me to come give a talk to their groups, to their fund managers, to their analysts. And I was in awe of how much money. We're not talking about billions. We're talking tens of billions of dollars on the sidelines. When Goldman Sachs reached out to me to tell me what they're doing in Mexico, I was flabbergasted with how much cash there is on the sidelines to get into this play that I talked about 2 years ago. Riverstone, same thing. BlackRock, same thing. So there's huge money. And Dan, what the key I would say is more important now than ever. I don't know of another time in history where so much money is managed by so few people. And when those few people decide it's time to get into resources, you've got to follow the money. And when that money flows in, a guy like Keith Neumeyer, his stocks, they're not going to just double. They're going to, like I said, look at First Majestic Silver. It went from $1 to $30 in less than 7-8 years. What is, less than a decade in our time frame? People have to switch off that I want to make a double in a quarter. It ain't going to happen in this sector. If you think that you're going to make a double in the next couple of months, go to Vegas and bet on black. Okay, it's not going to happen. At least in Vegas, you're going to get a free drink, and a really pretty waitress is going to be nice to you for a couple of minutes. That ain't going to happen here. But if you take the longer-term perspective, and you said something that was key here, Dan, that the big money managers are panicking about. when the Doug Caseys and the Rick Rules of the world, they've been through so many of these ups and downs. They've been in this game since before we were born. There's a huge age gap in our industry, and that is the biggest threat to the resource sector. You look at a guy like Keith Neumeyer, he's now an industry veteran, but he's got another good 15 to 20 years in him in the resource market. You know, you got to ask yourself, the industry legends, how many more years do they have? So when I focus on my franchise players, I don't want to get a Pele when he's coming to the New York Cosmos. You know, I don't want to get a guy with after his best years. I want to get him just before his greatest run, before he wins those 5 cups. So that's the biggest factor in this resource sector. And if you can take a 5-year perspective, and if you can't fathom that, you know, these companies will drop in the near term for 50%, then this isn't the sector for you. But if you go in understanding that and don't bet all your chips at once, average up, average down over time as your portfolio grows, grow with the position, you will do extremely well. And as I said, in 3 years of talking with you and your show, I've only recommended 2 stocks to your clients.
Yeah, and they've both been phenomenal. And when we look at the value of what they've done, they've grown significantly despite all the headwinds. And yeah, it's a great point that you bring up about the legends that we often cite, because in reality, this is probably their last big run when it comes to bear market to bull market.
Or many of them have had their last big run and they just don't know it yet. You know, I come across as the bearer of horrible truths, but, you know, a lot of these guys can't. It's like that legend warrior, that great athlete. They don't know when to leave the stadium. They don't know when to hang it up. And I think a lot of these guys, their best years are behind them. And I'm not picking on anyone specifically. What I'm saying is I think we're another 3 to 5 years away from the glory days in the resource sector. And, you know, I know a lot of very wealthy brokers who made their money in resources that have thrown in the towel. And I know a lot of these junior companies are just sitting there, like, not knowing what to do. That's part of this whole cycle. And people are like, well, gold has to go up to 2,000. No, it doesn't, because you look at mining companies, they're going to get efficiency and innovation via necessity. So their costs are going to decrease, tire costs, their input costs are going to decrease, so their margins are going to increase. So you're going to see a lot of innovation and efficiency increases for the producers, and slowly that's going to work through its system. And then in the next 3 to 5 years, when we have that run, you want to build your positions in what I call the franchise players, like Keith and Amir. These types of guys are what you want to invest in.
Marin Katusa of Katusa Research, that's katusaresearch.com, New York Times bestseller, and probably the smartest guy I know in the resource sector. And that's saying a lot, because there's a lot of great people, especially the people who associate themselves with Marin. Marin, thank you so much for joining us today.
Always a pleasure, Dan. Thanks for all the kind words. All the best.